Welcome to Inside the Markets, official podcast of StockPulse.com. With me today, President of Miles Franklin Precious Metals Investments. 30 years of dependability. Miles Franklin is one of America's oldest, most trusted bullion dealers, formed by the same father-son team 30 years ago now, still operates today. Miles Franklin's well known for their reputation, integrity, experience, knowledge, products, service, resources, and certainly their relationships. And Andy, I want to welcome you to the broadcast. I appreciate your time here, and I want to get into some of that knowledge you have being in this sector. And I'd like to get kind of a big picture view, I guess, of how you see the markets now in a whole.
I see a period of time where we have built Western economies are centered around Keynesian-based economics, and us gold bugs prefer the Austrian model, that is investment, savings, and reinvestment. And if everyone's house was in order to that degree, this wouldn't be a huge problem. If everyone owned everything and the base of their pyramid was built upon savings, investment, and reinvestment, we would survive. In a Keynesian-based economy, it's the antithesis of that. Everything is based upon debt, consumption, and spending. And if you take away consumption and spending, all that is left is a mountain of debt that collapses. And this is world over. The whole Western world uses Keynesian-based models, and as evidenced by the Fed's reaction to lower interest rates to basically zero, half of the world already has negative interest rates to the tune of about $20 trillion. The negative interest rates, the easy money, that's the Fed's reaction. Lower interest rates and throw money to try to get the engine of consumption and borrowing and spending reignited. And I would argue that does no good whatsoever. In 2008, it did. It was a liquidity crisis. In 2020, it's not. It's a crisis of people not wanting to die. It's a crisis of fear. However you feel about the virus, I'll simply tell you more people feel that this is a very real event. And in New York, over the last 10 days, persons died every 2 hours. Every 2 minutes, Every 2 minutes, a person has died in New York. And so that fear is a much stronger motivator than the greed that the Federal Reserve is trying to sprinkle upon us all in easy money and low interest rates. And I don't care how many $1,200 checks they send to the public. I don't care how low they lower interest rates. That won't get the engine of consumption reignited anytime soon. And so I'm very concerned. And where I find the greatest concern is in what I'm seeing here in this industry. That is the beginning of price inflation. Now, over the last 12 years, we've seen easy money and low interest rates, which has translated into asset price inflation. And all of the stocks and the bonds and the real estate peaked in value because of easy money and low interest rates. And when that pull pulls out, like we're seeing, the great volatility in the stock market lately, up 1,000, down 1,000, up 1,000, down 1,000, to me, that's Fed intervention buying up the pre-market S&P and Dow futures, pushing the price up high. The next day or the day after, when it falls by an equal or greater amount, that's the insiders, maybe the baby boomers who have watched very quickly how 30% of their wealth can evaporate in 2 weeks. They're using any semblance of strength to sell. And now you go from asset price inflation into price inflation when that money comes into the economy. It never has. It's been holed up in equities and in real estate and in bond market prices. But now when that comes out looking for tangible items like gold, exactly what you're seeing, the highest premiums I've ever seen, much bigger orders from people who have never bought from us before, much more mainstream, telling me, being very declarative, that they are selling stock positions, cashing out 401ks. Well, this is stuff that we never saw before. But it won't just end with precious metals. It'll move on to things that people need, food and medical supplies, and things that people really need will become very expensive because the big money that's pulling out of the markets will chase things that are important to them. And so you have a broken supply chain for all of these goods. that is being inundated by more money than they've ever seen the markets have, at least in terms of the precious metals market. The volume of sales is unlike anything we've ever seen. We did over 6 months worth of business in the month of March. We're just one company, and all of the mints are struggling to keep up, as is. The refiners in Zurich are shut down, the mines across the globe are shut down, and the fragility of the supply chain will only exacerbate this problem. But as people pull out of financial assets looking for somewhere safe to put it, the very first market or the very first industry that's going to experience massive price inflation, I'm not even talking about the price increase, I'm talking price inflation, the premium you pay on top of the item. It's going to go parabolic. And quite frankly, if you told me in 2 months, if things didn't improve, that there would be no physical gold and silver in this industry, I'd totally believe it. 100%. It's becoming very difficult to get. I have to pay way more money to pry it out of the system. And this is with a compromised supply chain that is still somewhat functional. You shut that supply chain off altogether, and that's it. There'll be nothing available for anyone, no matter what price they are offering, because they say there's no bull market like a gold bull market for one reason, and that is that all the other markets speak to our greed. This speaks to people's fear. And the higher the price goes only reinforces their fear. They're not going to cash back out and play with house money when they have to cash back out into dollars, which is what they're trying to get out of from the get-go. So this is an environment that is nothing like 2008 other than watching the mints run out of product. This is an environment that the Fed, I don't believe, can restart anytime soon.
Yeah, that brings me to the next point here, price discovery. You touched on it a bit here. So you've got a supply and demand issue. You know the metals are certainly in a nice channel upward, yet supply is thin. You're not here to necessarily make a bet, but how do you balance that out? And if everyone went to the window, could we even deliver the metal?
Well, first of all, as far as what I'm selling, people always say, I see these dumb comments on when you give a speech and you get these trolls that say the most ridiculous things. Well, why would he sell it if it's so valuable? Shit, I've been buying it every 2 weeks for the past the past 30 years. I've never missed a 2-week period in over 30 years buying personally gold and silver. It is my wealth. It is my form of savings. It was the only rule that my father told me I had to abide by when we started our company 30 years ago, he and I, period. So as far as product is concerned, I have to pay a whole hell of a lot more just to get any, and to find it to be able to sell to anyone, I have to pay a whole lot more. But what is more concerning to me is the breakdown of the COMEX market with the London Metals Exchange, and the price on COMEX is breaking. The disconnection has been as large as $50 or $60 recently, where COMEX says one thing and the real price of metal on London is another. And all of the big suppliers, when they're using London Fix now or London Market instead of COMEX Market, and so Kitco on the COMEX price may say 1685 when gold's 1715 or 1720, and people are having a hard time seeing that, but you can Google it and see it. Price discovery is becoming very challenging. The Western price setting mechanism is breaking right in front of us. There were 28,000 contracts that stood for delivery in the April contract. That's 2.8 million ounces of gold. It was over that. Normally 5,000 or 6,000 stand for delivery. They had to change the rules in midstream. You see, the COMEX only deals with 100-ounce bars. The London Metal Exchange deals with 400-ounce gold bars. So all these people that stood for delivery, many of them received a revised settlement that said you have to accept a fractional interest in a 400-ounce gold bar. I don't know how they plan on doing that with a butter knife or something, or remelting them into 4 100-ounce bars. Not quite sure. That wasn't in the contract, but suffice it to say they changed the rules to suit them, of course. But London is saying, well, by the way, your price is wrong. And if you want the real thing, not the paper thing, because you've rehypothecated it so poorly, so many times over. If you want the real thing, it's actually going to cost you 4, 5, 6% above what you're actually purporting it to be. So price discovery is breaking. If I were a big trader, I'd stand for delivery in mass next delivery month in June, because they've proven that there are cracks in the seams, and they can't deliver because of rehypothecation what they have committed to. And if you think price discovery is hard now, basis a premium, which I'm going to touch on in a second. Imagine if there's no COMEX. Now I can't hedge anything. Now it's wires up front or you get nothing. As far as price discovery, today I had to make a decision to buy 25 or 30,000 1-ounce Earth Mint Dragon silver bars, which I did. But I paid 3, 4, 5 times what I've ever paid in premium to buy them. And I had to think about this, because if I'm wrong and everything goes back to normal, the supply chain greases up, cure for the virus, and I just paid many dollars over what I normally do. I paid $100,000 more than I should to buy this stuff. And now I will lose on that no matter what I sell them for. So my point to you is that everyone has to bear this new reality, including the dealers who are buying the product like myself at the highest premiums we've ever had to buy them on. You can hedge the value of the metal. You cannot hedge the premium. And if I'm wrong and the wheels now all of a sudden get reliquefied and everything goes back to, November of last year type of deal, then I made a colossal mistake. If I'm right, in the end, premium doesn't mean anything. Price doesn't mean anything. What is a 9mm gun worth without any bullets? And so I guess all I'm simply saying to you is that what are the bullets worth if there aren't any, and there's only a few left, and there's no prospect of getting more? And that is kind of what I see happening if things don't get better. Not only will you see nationalization of mines that are already shut down, but you'll see the inability to transact business the way that it used to be done when half of the mints around of the world are across the Atlantic. And so just getting it here and then sending it out through God only knows what this plays out, but for sure through a fragmented supply chain the entire way makes the friction of these types of deals very, very, very acute, much more so than we've ever seen in 30 years of business. So, yeah, price discovery is not great right now, and I expect it to probably get a whole lot worse. So anyone who knows me, if you listen to all the interviews I've done over the last decade, I don't speak this way ever. I talk about gold and silver as wealth. It's immutable wealth that you hope you never need to use. You accumulate as often as you can. I've been doing it every 2 weeks, as I said, but I always use that as my analogy that to me it's wealth. It's not an investment. But I'll tell you one thing. My biggest concern is the viability of my business in being able to continually acquire product. And that's why they do say there's no bull market like a gold bull market, because the higher the price goes only reinforces people's fear. Like, geez, I was right. After all, the dollar's dying or the markets are collapsing and blah, blah, blah. No one ever goes back into dollars. At least they certainly won't now. So I look at product acquisition as our biggest challenge going forward in a supply chain that I just can't see getting any better until there is a cure or until there is certainly less apprehension to get out and work.
Let's get into silver here. The ratio suggests that they've literally left silver, dead as a monetary metal. What are your thoughts here? I got to believe with this ratio out of hand, you're a guy who talks about swaps. This might be a good time to get yourself positioned in silver, huh?
Well, silver is one of the few monetary and industrial metals, and it's the most undervalued commodity on the planet. There's no other commodity I can think of that is trading at a third of what it cost in 1980, and it's totally necessity to everyday life, and maybe that's why J.P. Morgan, who has been accused of 6 RICO indictments on 6 of their traders, racketeering charges on the precious metals desk, and been accused by the Justice Department, who is investigating J.P. Morgan right now for this as a criminal enterprise relating to their precious metals desk. But that's probably why they've accumulated over 950 million ounces of physical silver. It's the largest position the world has ever seen at one time. It's 9.5 times what the Hunt brothers tried to buy. The long game for silver, according to the most sophisticated traders on the globe, is bright, and or at least they're painting it that way by their actions. A ratio where we are right now is 4 feet of snow in the Florida Keys in July. It's the biggest anomaly I've ever seen. The market will tell you, the industry will tell you that silver is actually higher than that because you can't find physical silver really anywhere for much under $4 over the spot price, at least with any expediency in getting it. I can sell you 1 ounce rounds that are 8 weeks out or 10 weeks out at a couple bucks over that are normally 50 or 60 cents over. But if you want stuff that's going to be here in the next few days or is here with anyone in America, you'll pay between $7 and $10 over spot to get 1 ounce government issued coins. That still doesn't dissuade me. It lowers the ratio a little bit, but I guess succinctly I would tell you that silver is probably not only the most undervalued commodity or asset on the planet, it might be the best investment on the planet. And I normally don't talk about gold and silver in terms of investment words. I say wealth, I say insurance, I say privacy, but it is an investment. And in this respect, when you buy something that is super overvalued with the expectation of it moving higher in price, that certainly speaks of investment. And I would say there's a good chance that if people have strong enough fingertips and can hold on long enough through these gyrations, that silver will turn out being one of the better plays they've ever made, even at these higher premiums, because it's a depleting asset. It's needed in industry and in military. And when you see the most sophisticated group of traders corner the physical market of it, it should tell you where they think it's going also.
Before I let you go here, Andy, why don't you lay out the Miles Franklin operation? You've certainly made a case to own precious metals. I think anyone who listens to these shows probably has some sort of exposure to them or is intrigued about the opportunity. So I know you're a good vehicle and a solid reputation, so run through your operation.
We've been in business for 30 years. Just last month, we've done over $6 billion in sales without ever having a customer complaint ever. Any registered complaint, you will not find one on on Google as an example, or the Better Business Bureau website where we maintain an A+ rating. Never had a complaint. We're one of only 25 or so U.S. Mint authorized resellers ever approved by the U.S. Mint. We are very proud of our reputation in a federally non-regulated industry. But the state of Minnesota, where we're located, really doesn't care much about all of our accolades, because it's the only state in America where you have to be licensed and bonded in order to sell precious metals. This is a federally non-regulated industry that has so much so, more or less every company outside of Minnesota, about 99% of them online, will not do business in the state of Minnesota, because they themselves would have to be subservient to the same regulations we are, namely the surety bond and the background checks. And the continuing education and compliance is enough to make these companies say, nuts to Minnesota, I'll work everywhere else. What it means to your listeners is that we are by far the safest transaction in precious metals, or any company domiciled in Minnesota for that matter, because of our bonding. If all of the money was stolen from any client who we do business with, no matter if they're in Minnesota or any other state, the state of Minnesota has a 7-figure surety bond to remunerate people and come looking for me sitting on a beach in Tahiti, I guess, in that story. But there are very few safer ways to accumulate metal than to buy it from a company domiciled in Minnesota. Hopefully us. One other thing is that we are not an online store. I will beat any price in the United States if your listeners email me directly at Andy@MilesFranklin personally, and I will beat any price in America, hands down. But I've chosen to go offline. We could talk for an hour on what I've seen in this industry in identity theft and consumer fraud, stolen credit cards, the whole 9 yards. And I've chosen to not be part of that, at least for now. We closed our online store over a year ago. We don't get fraud anymore. And for me, I would rather be analog in a digital world. And quite frankly, I think that's where gold and silver should be too. Most people enjoy the privacy one gets in buying precious metals. And if you are online, the level of sophistication and hacking is growing by the day. And so at this point right now, it would require an email at Andy@MilesFranklin. and to get the very best price, or to call us at 800-822-8080 and ask for Andy. I'm the owner, and I will personally walk people through questions and getting the very best price.
Okay, well, certainly appreciate your time there. That's Andy Schectman. He's the president and CEO of Miles Franklin. It's milesfranklin.com, and as he offered up, Andy at milesfranklin.com. And Andy, appreciate your time and certainly your knowledge, and we'll look forward to checking back in with you here maybe in a few months and see how this thing plays out.
It's my pleasure. Have me back anytime, and all the best to you and yours.